All right. Welcome back, everyone, for another deep dive. You know we're all about leveling up your investing smarts, and you guys have brought us some really interesting stuff to dig into.
Yeah, this is a good one.
Today, we're tackling something that might seem basic at first glance, but trust me, there's some serious depth here. We're talking about why you should never just copy someone else's trades.
Right. Sounds obvious when you say it like that. Don't just follow the herd.
Exactly. But the source we're looking at today lays out exactly why that is. It basically says don't copy other people's trades because you don't know their risk tolerance, position sizing, or time frame. So I get that those things are important, but I think a lot of people get tripped up on this.
Oh, absolutely.
How do these things all connect to copying trades? Like, why does it matter?
You know, it's a lot like, imagine trying on someone else's shoes, right? You don't know their foot size. You don't know how they walk. What looks comfy and stylish on them
Oh, yeah.
could end up giving you some nasty blisters. And trading is kind of the same way. What works for one person can totally backfire on someone else. It's all about context.
Okay, I see that. I like the shoe analogy. So let's break down these ideas one by one. First, we have risk tolerance. I think a lot of people hear that and think, yeah, I know what risk is, but I'm not sure they really do.
Right.
So can you unpack that a little bit? What does that mean in the context of actually like putting money on the line?
So risk tolerance is basically how much potential loss you can handle, not just financially, but emotionally too, right? Some people can stomach a lot more volatility than others. It's super personal. Think about it like this. A young investor, they're just starting out. They probably have a higher risk tolerance.
Right. They got more time to recover.
Exactly. They've got time on their side. Even if they lose some money, they have years to make it back. Their investments have more time to grow. But someone nearing retirement, that's a different story. They need to protect what they've built. Big losses at that stage could totally derail their plans. So naturally, their risk tolerance is going to way lower. It's just a different game.
That makes a lot of sense.
Yeah.
So much different. It's almost like comparing a speedboat to a cruise ship, right?
I like that. Yeah.
The speedboat can handle choppy waters. The cruise ship needs calmer seas.
And you know, the younger investor also benefits from something called the time value of money.
Okay.
Essentially, the earlier you invest, the more time your money has to grow exponentially through the power of compounding.
Right.
So even if they take some risks and experience losses along the way, that early start gives them a significant advantage in the long run.
So basically, the earlier you get in the game, the more time is on your side, the more you benefit from that compounding.
Yeah.
So blindly following someone's trades without knowing anything about how much risk they're comfortable with,
Yeah.
it's like sailing into a hurricane without checking the forecast,
Yeah.
just asking for trouble.
Okay.
So next up, we've got position sizing, which a lot of people, again, they hear that word and they're like, huh. So for our listeners out there, position sizing refers to how much money you're actually putting into a single trade. So like, why does this matter when we're talking about copying someone else's moves? Can't I just like scale it down?
Yeah, you'd think so, right? But let's say you see someone invest $1,000 in a stock and it jumps 10%. Great, right. So you decide to do the same thing, but you put in $10,000. Now on paper, yeah, you're mirroring their move, but what happens if that stock takes a dip? Let's say it goes down in 10%. Well, your friend, they're only out $100, but you just lost $1,000.
Oh, yeah, that's going to hurt.
Same percentage, but a way bigger impact on your portfolio.
So it's not just about being right or wrong on the trades themselves. It's also about how exposed you are.
Exactly. And this leads perfectly into our final element here, which is time frame.
Okay.
You've got some traders, like day traders, who are in and out of positions super fast, sometimes multiple trades in a single day. They're trying to capitalize on tiny little price fluctuations. It's high speed, it's high risk. But then you've got other investors who are in it for the long haul. They're looking for steady growth over months or even years. Very different strategies.
So if I'm copying someone's trades without knowing if they're playing the short game or the long game, I could end up making some really bad decisions.
Absolutely. You might panic and sell way too early, or you might hold on to something while it's tanking because you didn't understand the original plan. It's all about having that context.
Yeah. So trying to apply a day trader's moves to a long-term strategy, probably not going to end well.
Probably not.
This has been super helpful. So for our listener out there who wants to make smart investment choices, the takeaway here is don't copy trades blindly. It might be tempting, but it's a risky gamble. It's like playing a game without knowing the rules.
The key is to become an informed investor.
Well,
Learn from successful traders. Absolutely. But don't just mimic them. Study their strategies. See how they make decisions. Figure out what makes them tick. Then you can adapt those lessons to your own unique situation. Develop your own approach that works for your risk tolerance, your position sizing, and your time frame. You know there are a ton of resources out there to help you do that.
yeah, like learning how to understand financial statements or exploring different risk assessment methodologies.
Exactly. Like the Sharpe ratio, which helps you evaluate risk-adjusted returns.
Great advice. Instead of relying on shortcuts, build that strong foundation of knowledge. That's how you develop your own investing style and make smart choices for the long run. Good luck out there, everyone.